Hi, I'm Kaylin Anderson with the Bill Azell team and approvedbybill.com. And I wanted to ask Bill a couple of questions today that borrowers ask us about FHA loans. First of all, Bill, what is an FHA loan?
So an FHA loan is backed by the Federal Housing Administration. That's why they call it FHA, so it's government-backed mortgage insurance. So anytime you don't put down 20%, you have to have mortgage insurance. And this particular mortgage insurance is the most aggressive out there because it's provided by the government.
Okay, Bill, can you tell us a little bit about the flexibility of an FHA loan?
So first of all, FHA loans only need 3.5% down. So it's very low down, and that could be a gift from a family member. It can come from down payment assistance. It can be a fixed asset. So 3.5% down, very easy for me to pay the closing costs. So that way I can hold down your cash to close with a very slight rate increase. When I compare it to conventional loans, I have to go up much higher on a conventional loan to cover the closing cost. It also allows a much higher debt to income ratio, meaning if you really need to stretch to get into the home, I can go up to 57% of your gross income for all your debts. That's about 12% higher than a conventional loan. So that means much more buying power. Also, it's much more flexible on the credit. So I go down to a 580 credit score. And in fact, if you're not there, I have a full-time department that will help you get there. We can also do people without credit scores. I can look at doing 2 years out from a Chapter 7. So if just came out of a Chapter 7, please talk to me. I'll help get you lined up for that. If you've been in a Chapter 13 for a year and you made your payments on time, you're fine to buy. Additionally, the rate's lower than conventional loans. So oftentimes your overall payment will be lower because the mortgage insurance is the same, even on lower credit score folks, as it is on higher credit score folks. Where on a conventional loan, if you happen to have a little bit lower credit, you're gonna pay an awful lot for mortgage insurance. So overall, the payment can be much better on an FHA loan. And lastly, another benefit with the FHA loan is I can use a job that you're starting within 60 days of close. So if you're coming in from out of state, just make sure you give us the documentation. You're starting in 60 days. You can buy your new home here and not be on your job yet.
And finally, what are some of the disadvantages of an FHA loan?
The biggest disadvantages to FHA, first of all, is if you're looking at a condo, there's not too many complexes that are FHA approved. So it will really shrink your pool of condos that you can look at. So that's the first disadvantage. The second disadvantage is they add a funding fee on top of your loan. So it's always 1.75%. So for every 100,000, you're gonna be adding 1,750 to your balance. Secondly, there's monthly mortgage insurance, which there's slight differences if you put more down, but basically it's life of loan. So I cannot get rid of that mortgage insurance without refinancing you into a conventional loan. So it doesn't matter, you're into it for 15 years, your property's worth twice as much, you're still paying the mortgage insurance for life. So those are probably and the property condition also comes into play on FHA. So you do not want to go under contract with a property that needs a ton of stuff because I have to prove that utilities are operational. Peeling paint is a big problem with FHA. So if the paint's peeling all over the property, it's gonna have to be taken care of. Health and safety issues come into play. So on a house that is not up to par, it can be a disadvantage.
Thanks for answering my questions, Bill. Again, my name is Kaylin Anderson on the Bill Azell team and approvedbybill.com. Keep in mind that Bill has over 20 years experience in the mortgage industry and is one of the top 1% of mortgage originators in the country. So we're here to help. He can answer any questions you have, and don't hesitate to call. We'd love to help. Thanks again.